Courtney Reagan, great to have you.
So
thanks for having me.
You are the head retail reporter for CNBC.
Yep.
Which is crazy right now because, if everyone listening to this, of course, like every day something's changing in the market, literally every day. So we might talk about something one day on the podcast and then 2 days later it's outdated because something crazy just happened.
Right.
But as of today, we just had the craziest last 24 hours.
Yeah, the market's been a bloodbath. Trump put on these reciprocal tariffs, which we'll get into at the end.
Liberation Day, he's calling it.
Liberation Day.
We're not even calling them reciprocal tariffs, by the way, at CNBC, because it doesn't make sense.
I was going to say,
because
what's the term?
I don't know. Did you guys see the formula that was used?
And I wanted to talk to you about that because that just blew my mind.
Okay. So they're not reciprocal. They're just new tariffs.
So I think definitely let's get into the tariffs. But we could talk all day about that, and you're probably going crazy and can't wait to get back to the studio and the office to dive into that right now. So again, super appreciative of you just to hop on. So let's just talk about just the general state of the retail environment. And we'll put tariffs aside for just 1 or 2 minutes.
Sure.
So a lot's changing. Obviously, we're a commercial real estate centric podcast, but retail is a big component of that. Consumer spending is a big component of that.
That's right.
So what is going on in retail right now? Tell us.
Yeah. So, I mean, again, let's put the tariffs aside, which is a little hard in my mind, but let's talk pre-April 2nd. Okay.
Perfect.
So I would say what was going on in retail is we just wrapped up all of the fourth quarter earnings calls for retailers, which Christmas feels like a lifetime ago, but technically we just found out how that Christmas quarter wrapped up for the countries and in some cases the world's largest retailers. They always report at the end of the cycle. Banks often sort of kick us off at the beginning of that earnings cycle, and 4 or 5 weeks later you hear from the retailers. And so what we heard by and large was that the holiday season was actually pretty good, both for sales and for the company's ability to generate profit, right? So to sell items, but without having to heavily discount them to do so. But the market kind of looked past that good Christmas holiday and cared so much about the forward-looking guidance, which is always true because you always want to be forward-looking if you're an investor, right? Yes, history is helpful, but we really want to know what you expect to come, right? Because I can't go back and make money now on buying your stock in December now that I know that holiday turned out well. And so we're always looking ahead, but I think this time it was particularly useful because we have this new administration that does make a lot of policy changes that can very much impact the state of business in a way that we didn't frankly see with the Biden administration. Politics aside, facts are just facts, right? There were just not policies that deeply impacted business as much as we saw in the first Trump administration and what we thought we might get this second time. So again, pre-April 2nd, we hear from retailers truly, I thought, we're going to come on this podcast. We're going to talk about the state of retail. It's going to be perfect timing. We just got the freshest financial information we can get. And so holiday was really good by and large, but the forecasts going forward were conservative at best. I would say concerned, I think is the better word. So there weren't a lot of retailers that said, hey, we're really seeing a big change in consumer spending past Christmas. But a lot of them did say, we think we might see a change in consumer spending. So here's an example. I spoke with Dick's Sporting Goods executive chairman, Ed Stack, who's also the son of the founder. So really interesting, right? His father started with just a handful of stores and now he's made this huge nationwide chain and he's still the executive chairman, so runs the board. And what he said is, look, we haven't seen any downturn in consumer spending in our product categories. And he always tells me, if your kid has a new soccer league, you're not going to make them squeeze into their cleats from last year. You're going to buy them a new pair, even if times are tough. So maybe some of that is explained by that. But
more sort of luxury goods, there's kind of a pullback now, no? Or?
So there has been. And what we find in that is that while the luxury goods often are being bought by higher income consumers who you would think maybe have more cushion, they're not watching paycheck to paycheck what they spend, they are often more tied to the stock market. So if the stock market goes down, that's sort of how they associate their wealth rather than their actual paycheck or what's in their bank account, right? It's sort of like a paper a paper point of view for
Yeah,
them, right?
right.
It's like their screenshot of their wealth at any one time.
So that impacts the upper end of the
That
segment.
impacts. So if you start to see the market fall, you're going to see the high end pull back first, and that doesn't happen for the low end until unfortunately jobs start to be lost, and then they're actually feeling it in that weekly paycheck.
So who do you think has the quickest and largest, most sort of disproportionate impact on things? The higher end consumer or the lower end consumer?
That's such a great question.
I don't know if there's an answer.
And I don't. I have never thought about that. In a way, I almost want to say the lower end consumer, because I think then what happens when you start to hear or see lower end consumers pulling back, there's a consumer sentiment ripple effect.
Yeah.
Right.
Yeah.
Because it's like, oh my gosh, if the low end is really stretched, then everyone else starts to get sort of hyper aware.
Yeah.
Plus, it's got to be a greater volume, just generally speaking.
Makes sense.
Right.
I've seen firsthand how the right platform can make all the difference for advisors and their clients. With decades of collective experience in investment sales, debt placement, and equity placement services, Graysteel has built a culture where collaboration, relationships, and excellence power results. Backed by concierge-level infrastructure, proprietary technology, and an entrepreneurial mindset, the firm enables professionals like myself and our team to deliver tailored solutions, precision-driven pricing strategies, AI-enhanced insights, and exceptional value at every stage. Discover how top professionals are scaling their business and continually unlocking new opportunities for their clients at graysteel.com.
Yeah,
So,
very interesting.
Cyclical stocks right now, cyclical brands that are doing, well when times are good, not great when times are bad.
Yeah.
How is that playing into the market right now?
Oh my
What are you
gosh.
seeing?
Again, and when you say right now, it's like, are we talking about?
That's true.
Are we talking about Monday or are we talking about today?
Yeah. By the way, we also realize how much there is to unpack because you have so many ends of this segment.
Right.
Completely different product types.
Totally.
Everyone's impacted so differently. Like there's no one broad stroke retail category.
So I'd love to talk about, just to try to answer your question. Let's use Gap as an example. Okay. So Gap is a global apparel retailer. Gap is obviously the namesake brand, but their largest brand is Old Navy, which does often skew lower income. And then they have Gap, the second largest brand. And then they have Banana Republic and Athleta. They have a CEO who is relatively new. Off the top of my head, I want to say he's in his second year, maybe a little bit more or less. And so he has this strategy to sort of turn things around. He talks a lot about financial rigor. So sort of looking at, the balance sheet and like getting out the junk, right? Cutting out costs. But then he's a big brand guy, right? So he's focusing on the brands. And it's really, really been working for him. There is a little bit of 90s momentum, sort of back when I was in high school, I'm seeing.
Yeah.
So that is helpful for the Gap and maybe for Levi right
Gap
now.
used to be so cool and you wouldn't want to wear Gap on your sweatshirt.
And that's what he's trying to
until
get
it
back
became
to.
really uncool.
Right, exactly.
But similarly, Abercrombie did a really good repositioning, and I feel like they took off.
Oh, that's
now.
another great one to talk
It
about.
all comes. Wide pants is cool now.
Yeah,
Wide
exactly.
pants.
That's
So
all we're
it
getting
comes
at. It's
Right.
wide pants.
And so the Gap example is an interesting one because going into this week, they were doing great. I was just in Las Vegas. I talked to the CEO, Richard Dixon, both on stage and on TV. We were talking about everything that's going well for his company based on both what he's doing, but also I think the macroeconomic environment was sort of helping him. And then all of a sudden, this tariff announcement came out. And I think Gap lost 20+% yesterday.
Crazy.
So to lose almost a quarter of your value in one day when nothing you're doing as a company has fundamentally changed. But the fact that you do source a decent amount of your manufacturing from these countries that now have been given a very high level of tariff dramatically changes not only your cost structure, but the other big worry, and maybe I'm jumping ahead of myself here, is that what I was told yesterday by an analyst was, I think the companies are more afraid of what this means for consumer demand destruction than it's going to cost them to sell the goods. So yes, the cost of doing business for them is going up. We're going to have to pay for that as consumers. But if that price of those wide leg jeans is now, let's say 20% more, are you going to buy it?
Right.
So that is the bigger worry, it seems, right now from retailers, is are consumers going to be so scared of these higher prices that they're just going to pull back writ large?
What about on the opposite end of the spectrum, consumers trying to buy up as much as they can, as quick as they can?
Oh my gosh,
right?
yes.
Everyone's scared that prices are going to go up too much.
I wonder if they feel that way about wide leg jeans. Like, is that...
I know, stockpile them now,
It's going to be hard
right?
to find.
Or are we going to it's going to be like COVID where you stock, hand sanitizer,
Toilet paper.
Yeah. So I mean, is that a worry though?
Yeah. I mean, truly, I've had people in the last 2 days ask me, like, what should I buy now? People that I know that work in the business with me. I don't want to call them out by name, but they're like, I found a couple pairs of shoes I really like in my size. I decided I was just going to buy them because who knows what the price is going to be next week.
They're part of the problem.
I know.
That's a very interesting perspective on both ends. Also, like in large part, it's just a market overcorrection as well because you have the insiders who understand what's actually going on. They've run their models and they've priced what the impact of these tariffs are on some of the major companies.
Yeah.
Then you have the rest of the market that's like, my portfolio is down 15%. I need to liquidate everything I have. So I'm sure next week it'll come up a little bit, but still
I hope so. That's the question. That's
whole.
The question we've been having is sort of like, okay, like, is this the kitchen sink moment?
Right.
Like, are we clearing the decks so then it can only get better from here?
So
you tell me, and I'll invest with your advice because
it
I don't
always
know.
feels that way. Like for the last 2 years, like through elections, especially now, leading up to people knowing that we're going to hit the election cycle, every moment felt like a kitchen sink moment.
Yeah, that's right.
It's every
true.
Market correction felt to me like such a nervous dump, especially back in like January and February of this year, even.
Yeah, I wonder if like prescriptions for Ativan have gone up.
They did during COVID. We know they did during COVID.
That's a good stock.
So let's go back to the retail points. So you brought up a couple of interesting retailers. Like we spoke about Gap. Are there any big companies that you really feel like have the biggest push on the market? Like who are people really looking for? Is it like Walmart?
Yeah, exactly. You hit it on the head.
Yeah.
Walmart. So next week, Walmart has its investor community meeting, which basically is sort of like where the analysts and the people that really know the financials of the company will meet with the executives and they lay out their forward-looking plan. We don't know what that means. Are they going to give us this year? Are they going to give us multi-years? It's a little different every time. And I think we're really, really waiting to hear that. Walmart is still, as big as Amazon is, Walmart is still the world's biggest retailer by retail revenue.
Yeah,
right?
I was really surprised to see that.
Amazon has surpassed them in revenue in total, but a lot of that revenue does also come from AWS, right? So if we're talking about pure retail, Walmart is still the biggest by revenue. And what they've been telling us over the last, I'm going to kind of guess, but I want to say 3 or 4 quarters, actually maybe more, is that they've been grabbing a higher income consumer. So a consumer whose household income is $100,000 or more. So not only does Walmart then become a proxy potentially for sort of the bargain seeking part of the world, really, because they have, stores all over the world under different brand banners, should try to say. But also really, for potentially higher end consumers, maybe looking for a trade down or maybe looking for a good deal.
Interesting.
Which is also super interesting. And then I would just say one more thing about that. The other piece is they have invested billions of dollars over the last decade in trying to really ramp up their digital commerce in order to better compete with Amazon. Yeah. And they have, to their credit, successfully used their stores as sort of part of this flywheel through grocery. So the grocery has become a huge driver of traffic and sales. And, either people can order online and then they drive up and then you load the groceries in their car. I know that sounds crazy for those of us that live in New York City. Like, how could that be more convenient than someone bringing it to you? But if you're coming home from work, that is very convenient.
Well, it seems like they have a leg up in the sort of omni-channel way of things, right? They already have so many physical stores everywhere that they can take advantage of. And I know now one of the things they're digging into is, and you would know more than I would, is the drone delivery.
Oh my gosh, I've seen it.
Where's that happening?
I've seen it. Yeah,
it's not happening in New York.
Yeah, no, I know. Obviously, there's a lot of regulation with that. But when I was in Northwest Arkansas, where Walmart Walmart is based, I did actually watch them do a drone delivery. They sort of had this set up in the parking lot, and I watched this drone, sort of take off, and then I watched as far as I could and then deliver a package.
So cool.
Yeah. So obviously the regulations are going to vary area by area. I would still say it's obviously largely in a beta phase. There's only so much that they drone can pick up in a weight-wise
but
scenario.
It's clearly the future. It's clearly going to happen.
Yeah.
I know they're testing it in DFW right now.
Yeah.
Northwest Arkansas makes a lot of sense.
It's so interesting with the grocery component. I didn't think about that. And then I remember like Amazon buying Whole Foods and now seeing the similarities.
Think about the frequency, right? It's like a frequency business. So you get people in there.
Right. And then all of a sudden you remembered, I actually was looking for a beach chair.
Exactly.
I don't know why that's my example.
And then also then even in grocery just specifically, they've really focused on sort of their fresh, their produce, their meat to like really up that quality, really up sort of the value there. And I mean, look at the price of groceries. We're up, and an average basket inflation is up like 20% in 2019.
We just keep talking about eggs these days.
Exactly. And obviously there's like bird flu and there's sort of other influences that are going on there. But I think it's always people talk about, the gallon of milk or the eggs or whatever. And so even if you're wealthy, it becomes this, this point of reference sort of.
Why is it that like bacon, eggs, and milk are always the things you look at?
Well, what part of it too is I think that the CPI, the government data, does track those specific
is that
items.
One of the reasons why?
And it's funny because this week literally is Monday again, where the world looked a little different, and I thought we were going to get these tariffs on Mexican and Canadian products, which hits our produce aisle a lot. I truly was digging through the CPI reports to try to track the price of avocados over time, for instance, to see what an avocado cost in 2019 versus now. So like how much has that inflated before we potentially levy a tariff?
Is it pretty crazy already?
Well, I couldn't find avocados because we don't track that item in the CPI, but that's how I think.
Can we replace bacon with avocados?
Right now. Now maybe we should.
People don't even always eat bacon now.
I eat more bacon than I do avocados.
Do you do turkey bacon?
No, I do bacon.
Oh, that's great.
So good.
I'm a turkey bacon.
So salty.
So before we get to tariffs, which I really want to explore, I still want to ask you another question on retail.
Please.
So we spoke about kind of some of the leaders in the market. What about some like the big box stores? There's a lot of restructurings. We spoke about Forever 21 just earlier before we hopped on camera. Any thoughts? Like, what's going on in that space? Is it a e-commerce? I feel like.
Are you talking about big box specifically, or are you talking about like the Forever 21s, the bankruptcies of the world, like the Party Cities?
I guess I've been putting them together because it's been pretty much a poor performent on both ends, but I guess it should be bifurcated.
Yeah, I mean, I think when I think of big box, I'm thinking, Walmart, Target, Home Depot, Costco, Lowe's, and those obviously have sort of different stories and different things that are happening with them fundamentally and otherwise than, say a Forever 21 or a Party City or Container Store. These brands that are well known but are undergoing a lot of restructuring. And I think, obviously Party City is a bunch of stores. I know this is a real estate focus for your audience, and sort of the fate of those are still up in the air. And so, I mean, look, I think unfortunately there are things that happen with different stories when private equity comes in and they lever up some of these companies with debt, and then they sort of get in tricky financial situations. I think e-commerce obviously has a really, really big play. I think, when you can get something from Amazon for your kid's birthday party in 2 days, you don't necessarily need to go to Party City and walk the aisles.
I'm shocked there's still a Party City, honestly.
Yeah, it's tough to know which of those factors is actually influencing it. Like,
it's
hard
to
easy to
parse it
say
out.
it's e-commerce, but e-commerce has already been doing that for a while.
Exactly. I mean, I think everyone said when they looked at Toys R Us and they looked at that bankruptcy, which seems so iconic because it's like this toy store and there's all this nostalgia and people were so upset. Oh my gosh, I can't believe it's going. Well, when was the last time you bought a toy at Toys R Us, right? Yeah. And so it's not. And to be fair, to your point, it wasn't necessarily all Amazon taking share. It was Walmart. It was Target. And also, it was the way that company had been financially structured over the years with private equity, and it had a lot of debt. So it had a lot of debt, it had things it needed to pay, and it didn't have the sales that it used to have.
So I'd like to talk about that just with interest rates, right? How are a lot of these retail brands deleveraging or using leverage right now? I mean,
to be honest, I wish I knew. I don't know so terribly much. I know a lot of them have these like revolving credit lines that they got during COVID, and a lot of them have sort of just kept them as emergency funding should they need it, but they have not tapped into it. Let's hope that this week doesn't change any of that.
Seriously.
But the revolving credit was sort of a big thing that happened during COVID. And so I think right now they're okay. A lot of these retailers, I mean, when we're looking at corporate credit too, it's there are some people that are a little worried about what's going on, but it doesn't seem to be flashing like super red warning signs. It's just like, that's a yellow light. Let's just look and see what's going on there. Some of these retailers have pretty high yields, which is attractive to some people. So yeah, I think the interest rate is it's a really tricky thing. And just now our morning call on my way over here, our senior economics reporter, Steve Leeson, was talking about, now the Fed is obviously looking at potentially very drastic changes on their interest rate policy. And so I think that also becomes very tricky if you're a company that needs financing or has financing. What do you do? Do you go now? Do you wait? I wish I knew the answer for that. I'm not as much of an answer
too.
I know.
I think unfortunately everyone wishes that. Even the people making the decisions.
I know. I wish I was more of an expert on that for you guys.
We were just talking about how much of a stressful job it must be being the chair of the Fed.
Yes.
I mean, just
it's probably up there.
I mean, I
can't even imagine. I mean, he's speaking today, and obviously the market hangs on every word and the adjectives he uses.
The adjectives, you're right.
To describe the market.
Right.
If he says
one little
or if
scratch.
he says we expect modest economic growth
versus
moderate economic growth.
That term moderate just had a $1 trillion swing in the market.
Right?
Crazy.
And so I think, when he does his press conferences after the interest rate decision meetings, and he obviously comes out and usually reads a statement and then he answers questions. And I watch him. I'm like watching how he's thinking. He hears a question and I'm thinking in his head.
Did he swallow as he heard
that? What word, he must be thinking, what words should I use to answer this?
He's got to have a PR person, right? Or someone that's helping him.
Tons, I'm sure. I'm sure he has tons.
Like massage these speeches a little bit. Like, no, you use this word,
Courtney, what about the upper end of the market? So, like we saw last year, it's been within the year, I believe still, where LVMH started buying up a ton of property on 57th and 5th, carrying Prada. They all seem to have done it at once.
Good point.
And I couldn't help but think, obviously LVMH had an office there and they started building out a larger campus. Tiffany's across the street. They basically dominate this corridor. And I was thinking like, all right, are Carrie and Prada reacting to them, or is there just something that we're missing that's right here, why everybody needs to be back on Fifth Avenue again?
Yeah, I mean, I think, and your audience may know this, a lot of these brands do that as kind of, they market as a marketing expense rather than we're going to have blockbuster sales out of this location. Yeah. It's like, if, like you said, this like iconic Tiffany location, everybody knows where it is. Tourists, domestic and international, come there. You want to have your brand there and nearby. Yeah. I know at one point several years ago, Under Armour was going to open up in that FAO Schwartz location.
That's right.
And they ended up not doing it. But at the time when we were asking them about it, they did sort of say, yes, we don't really even care what the sales do in that store. We just have to be there. We have to be
To
present.
me, it was more of an indicator of like, they're buying and building out this location now. Why right now? What was it about that time?
Yeah.
I couldn't get a sense of,
that's a good point.
Do you have any opinions on like,
I mean, look,
what the upper end's doing?
I feel like you guys are probably more the real estate experts than I am. I'm more about like the sales in the store than the but maybe there was a fear interest rates are going to go higher, right? And so
now's the time.
Let's get in while we can, while the getting's good, while commercial real estate is still available. We're having a lot of return to office, obviously. So maybe if people are coming back into the office, they're coming to Midtown, they're traveling again for work and coming into New York. And before we miss out on these very key opportunities and locations, we should get in now. I do think that there has been still a lot of disappointment about international tourist travel here for retail. I know I used to ask Macy's about it a lot. What is the international tourist looking like? Because they really did see a material impact. Either way, when you have a lot of international tourists, they come to like this iconic
They want to see the flagship.
Macy's
Yeah.
Whenever I'm in New York and I'm walking Midtown, or I don't even feel like I'm in America, because all you hear is other languages.
Yeah.
Right.
Everywhere.
Right. And so, not even just in New York, but sort of these other key locations that Macy's was located in, one in Honolulu, a Macy's in Miami, where you have these international tourists, and it had been material. And then COVID happened. People stopped traveling. And then I think the strength of the dollar actually ended up impacting some of that international tourist spending travel.
Since pre-COVID with the international.
Yeah, we really haven't. We really haven't. And so that has been tricky for some retailers, particularly I think, some of these high-end retailers on the Madison Avenues, on the Fifth Avenues that depend on that tourist dollar. If they're not coming because, the dollar is stronger, their money doesn't go as far here, that is impactful for them.
I've seen firsthand how the right platform can make all the difference for advisors and their clients. With decades of collective experience in investment sales, debt placement, and equity placement services, Graysteel has built a culture where collaboration, relationships, and excellence power results. Backed by concierge-level infrastructure, proprietary technology, and an entrepreneurial mindset, the firm enables professionals like myself and our team to deliver tailored solutions, precision-driven pricing strategies, AI-enhanced insights, and exceptional value at every stage. Discover how top professionals are scaling their business and continually unlocking new opportunities for their clients at graysteel.com.
Is there anything interesting in the upper end of the market, like that luxury sector, that we should be paying attention to?
I mean, I think it's funny because I get really particular about the term luxury. After I went to business school at NYU Stern, and I took a class in luxury. And at the time we used this book, and it was about and I'm going to get it wrong, but 21 or 36 tenets of luxury. And sort of you have to hit these rules in order to truly be luxury. And very few brands in the world hit them. It's basically like Hermes and Chanel. Right. So when people even call Prada luxury, I'm like, ooh.
There's some.
I'm like, it's fashion, it's high end, it's
checking.
Not. Yeah, but there's some little things. So anyways, that's just my caveat whenever you say high-end luxury. Sure. I think the interesting thing is what's happening in the American side of that high-end and what's going on with Tapestry and Capri Holdings. So Capri Holdings and Tapestry were supposed to merge, or Tapestry really kind of buying Capri Holdings, and then the deal got blocked. And the government, this is pre-Donald Trump, but it got blocked and that didn't happen. And so now each of these businesses are sort of evaluating their brands within. So Tapestry right now has Stuart Weitzman, and they are looking to get rid of that. And then Capri is looking to sell Jimmy Choo, we think. A lot of this has sort of been rumored in the market. They've always been open to say, look, we're always looking to build out our house of brands or be open to deals when they make sense for us. So they've sort of left the door open. But I think we had these sort of two American fashion houses, high end, that were trying to build up their brands. Then they were going to come together. Okay, now they can't come together. So now they're separate. And now instead of getting bigger together, they're almost getting smaller, each of them, by getting rid of their brands. They haven't been able to turn around the Jimmy Choo and the Stuart Weitzman or the Versace, which is very interesting here. So I think that's probably what I'm most fascinated about in the high end story, is these American brands that were trying to be an LVMH of America, and it just didn't work or hasn't yet.
Yeah.
Well, you know what happens when that route continues, and if they keep shrinking and struggling, then then there's consolidation.
Right.
Well, let's pivot. I think this is a great time to pivot, because this is what everyone now. Granted, by the time some people hear this, for all we know, Trump takes everything back, and we go back to how we were.
Courtney's about to jump out of her seat.
Yeah. I know.
She's been ready to talk about this.
I know.
Yeah.
But let's talk about the tariffs and how insane it is. I was just looking at the cumulative tariffs for China right now, which if you add them all together would be 60+%, something crazy like that. So walk us through first, I'll let you take it from here, but walk us through first off, just the crazy way in which some of these tariffs were calculated.
Oh my gosh. Okay. So, April, it was, today is, I feel like we should timestamp this. It's,
right.
We're sitting here April 4th, Friday morning. So 2025, who knows what's going to happen from here. On April 2nd at about, I don't know, the Trump was supposed to come out at the Rose Garden about 4 o'clock. He was a couple minutes late per usual. Let's say 4:10. Mm-hmm. At about 4:10, I feel like everything changed. Trump came out and starts talking as he does. He's sort of losing his train of thought, speaking about tariffs and trade, and then eventually asks for this big poster board. And he holds up this poster board, and it has 2 columns on it. And he says, we're going to do all these reciprocal tariffs, and these are the tariffs that these countries charge us. And so we're going to be nice, and we're going to cut these rates in half, and we're going to charge all these countries this. These are we're giving everyone in the world a flat tariff rate. But then the 60 worst actors or bad actors, I think he called them, they're going to be worse. And so
the flat rate was 10%.
Yes. Now, again, we have trade agreements with a lot of these different countries individually already. So like Vietnam, for example, actually any imports, apparel imports from Vietnam was already subject to a 4% tariff, right? Yeah. So when he levies an additional 46% tariff, it makes the cumulative 50%.
Got it.
But on the sign he held up, it said 46%. So as eye-popping as some of those numbers were, in totality, they're actually worse.
Yeah.
But he held it up, and we all sort of thought, what? What is this column of the UK doesn't charge us 30-some% on imported goods. We were scratching our heads. And now this is definitely more in the vein of my colleague, Steve Leisman, who's our senior economics reporter. But he sort of started doing some digging right away on like, where did these numbers come from? Right. And they used this formula, they being, whoever was advising Trump in this trade scenario, because we don't exactly know who said what or whose idea was what. And it's this formula that literally looks made up because it's so complicated and looks like a calculus formula that I don't remember any of. But it largely takes into effect trade deficits. And Trump doesn't like deficits. Other people would argue, well, deficits are actually a good thing because it just means that we have enough money to buy things from around the world. And deficits are actually good. Mm-hmm. Trump doesn't believe that. And so anyways, it's a very long, complicated way of saying we're not on CNBC. We're not even calling them reciprocal tariffs like Trump is because they're not reciprocal tariffs. They were calculated with this other wild equation. Because
a reciprocal tariff would be, hey, you're charging 10% to me. I'm going to charge 10% to you.
Right. But then what Trump was saying was, in your example, you're charging 10%. I'll be a good guy. I'll only charge you 5%. Mm-hmm. But that 10% number is not real. That's not actually what they're charging us. And so I think that's what made us as reporters, truly, politics aside, just like, what? Like I operate in facts, right? Yeah. I want to be able to explain this to my viewers and investors. And I don't know how to explain how he got to 46% because I don't know what that number is that he just put up there.
Also, there's another side to this, which like I think Trump operates a lot in the world of the shock factor. And he's very good at the shock factor. And he can hold up a chart like that, read it like a children's book. And he's like, they're charging us 50%. We're doing 40%. Right. It kind of takes away and detracts from the fact that you also have to think about what the major imports and exports are with certain countries. Like when a country has a 60%, levy on their goods, what if they export one thing? Yeah. Mm-hmm. It's not the same to say that we're going to charge 40% on everything that comes out of the States.
Right.
And you're going to charge 60% on the
Some
on the
of these
one
countries in South America, they're coffee is the export. Right. That's it. And of course, we're big exports of services.
Right.
Which is something that doesn't get.
And I think, and obviously President Trump has talked about wanting to bring manufacturing back to the United States. And the argument that many people make is that sounds good, but we can't do that because A, those facilities don't exist, the workers don't exist, the skill sets don't exist. In your coffee example, we can't grow coffee in Ohio. Like the climate just doesn't work for that. So it makes sense how people would argue that trade makes sense is that you do what you're best at and then everyone is better off. And so, South American countries are really good at growing coffee and we're really good at exporting consulting services. Right. I don't know. I'm just going to make it up. Right. And then now we're both better off.
Right.
That's not how Trump looks at this exactly right now.
Yeah. It's not an apples to apples comparison.
No, and context is everything.
And really, shouldn't we be focusing on technology, IP, and AI.
So and I want to give an example to bring it back to retail. As I spoke with a CEO yesterday, who he manufactures jeans for companies that you know, Ralph Lauren, J. Crew, Madewell, Everlane, and he has 2 facilities. He has one at Vietnam, and he has one in LA. Now he does 80% of the production in Vietnam. He does 20% in LA. And the way he explained it to me is the LA facility helps us be reactive. So if we made a batch of wide leg jeans for Ralph Lauren and they sold so great that we have to sort of catch up that demand, it's faster for us to get it to the end consumer if we do it in LA. And because we're not doing the entire run of jeans, it's going to cost us a little bit more, but like it averages out,
they don't lose the consumer.
And they don't lose the consumer, right? But he's saying, I cannot do more than 20% in the United States. He said, I will tell you, it costs me half as much to make that same pair of jeans in Vietnam than it does here, purely because of labor, because of the cost of labor. Because that's the other thing is, American workers don't necessarily grow up in this country wanting to work in a factory making jeans anymore. We've moved on to different types of jobs. And so that's the other really tricky thing. There are companies that would probably love to make things here. It would be faster to get to their end consumer. Their transportation costs would be lower. But then they also look and they're like, well, but our labor costs would be a lot higher. And also, who's going to make the jeans?
We talk about this all the time. It's like for us on the real estate side, we see it in the world of construction.
Right.
Yeah.
And we had a good friend on here who was like, who do you know that's a construction worker?
Right. I mean, and maybe, and I was thinking about this for you guys today, I mean, maybe some countries or companies rather, will try to do some level of production here. Maybe there will be commercial real estate opportunities because they're like, look, we can't do a huge factory, but maybe we can do a little one.
Well, and the thing is, even if that is the case, that takes years and years and years for that infrastructure to come into play, right? So this is not a quick fix.
No.
I think there's just nostalgia for what America once was. And even then, it probably wasn't perfect, and people were having nostalgia for what America was before this.
I think about that all the time, sort of that psychological impact of nostalgia, bringing it back to the Toys R Us example. When people heard Toys R Us was like going away, people were so sad because it was this nostalgia feeling. But they haven't shopped there in a really long time.
Totally.
Corinne, to your point, like, and Jackie, you even said it wasn't perfect, but I feel like it felt happier, and a lot of people overlook that because we can't quantify it, and there's no science to like point to that. But sentiment is a real thing, and everybody you talk to, like, if there's one thing everybody can agree on today, it's bipartisan. Like, it feels wrong. Today feels just unhappy.
I agree.
We're at a constant point of contention.
It's because we're in our phones all the time. That's
But
I mean, I'm sure that's a large part what it is, but like nobody has been able to unite us on happiness. And I feel like that's why some of these things are coming back. Like why leg jeans, whatever. It's because we're grabbing onto those little things that can like,
it's like that old dopamine rush that you got. Like you remember being a kid.
Of course.
Gosh, remember I'm a Toys R Us kid.
That's right.
But then best day ever.
But then on to your point, we tend to be like all talk, no action. When was the last time you shopped at Toys R Us? When was the last time you supported your favorite retailer? So
or again, people say, I want to buy made in America goods. Of course you do.
But I don't want to pay.
But do you want to pay $70 for a T-shirt instead of $750?
Yeah.
Right.
I mean, that's the reality.
So what's the impact with Temu and
so that's a whole other interesting thing. So have you talked about the de minimis threshold?
No, tell us.
Okay. So companies like, and actually they say it's Temu. And the way I remember that is like Taylor Swift.
I'm an idiot.
Temu. No. Everybody says Temu.
You're supposed to be a professional, Jack.
And I accidentally say Temu because I hear everyone, but when they did the Super Bowl commercial, it was Temu. And I remember like Taylor Swift.
Yeah.
So just a little tip for anyone.
Did you
Temu
know like,
and Shein.
Like pho, soup is soup pho.
Yeah, I got that part.
Oh, I didn't know that.
He still calls it pho, I think.
Yeah, you do.
It's so
Wait, I didn't know. Wait, it's pho?
It's pho. Yeah.
Okay. I learned something new too. Yeah. Okay, so the de minimis threshold is something that existed in the United States that basically said small packages with a value of under $800 were not subject to additional tariff or tax. And so that's basically how companies like Temu and Shein were built. They like their entire business model is that you order something, they make it in their factory and ship it to you directly as a consumer in the United States. So they don't have to pay for rather than like
a huge pallet going
and putting
through.
it on a container ship, right? Where then they're charged for the tax value of everything. And what's interesting is, and I wish I would look this up before I came because now all the dates are confusing, but I want to say it was like, within the last decade, maybe even 2016, 2017, Congress actually increased that de minimis threshold from something like $200 to $800. So it's kind of funny that we've been mad at these like sort of Chinese e-commerce startups that have taken away share from American companies.
But we're making it easier.
When we actually made the law that allows their business model to work. So what just happened with the tariff announcement is Trump basically said, by the way, you don't get that anymore either.
Yeah, so explain this.
So they took away this de minimis threshold.
That automatically right away makes an impact.
Which is huge, right? Yeah. So now we don't know. What does that mean for Temu and Shein? What does that mean for their prices? Are they going to eat it to try to keep that consumer and hope that it gets negotiated away? Are they going to have to come up with like a new model? But we did expect that. It wasn't a surprise. But because the other tariff announcements were so big, the de minimis thing going away was sort of like, okay, that's
Can I take a step back? I mean, I think, of course, there's been trade imbalances. And like we were talking about, that doesn't necessarily mean a bad thing.
Sure.
But what about when another country has tariffs on us, much more so than we have on them?
Yeah.
And is that a good case to say, hey, that just seems unfair? We should be equal.
I think it depends. It depends on your economic point of view.
Right.
I think, again, I almost feel like that is making more of a political statement than a fact statement. So I want to be a little careful there.
Sure.
I can understand the argument on either side. I can understand the fairness side, which actually, to me, I'm not a politics expert, but that almost seems more of a liberal, a democratic ideal than a Republican where it's like, it's free market,
Yeah.
Which is also what's really funny about this whole trade thing with Donald Trump is actually,
it's very anti-libertarian.
Yeah. Conservatives are usually more like free market, let the market decide.
But as history repeats itself, the parties switch sides from time to time.
I know.
And we're in that point right now. Yeah.
So I hear what you're saying, and it's a great point, and I can see the argument on either side about it. And that is sort of the argument that Trump is trying to use, particularly with the cars, with the automakers. And saying, why should we be punished for selling our cars to you when we don't punish you for selling your cars to us?
Right. Because not only is your labor cheaper too,
right,
but you're also, it does seem unfair.
Right.
And this is when I talk to a lot of folks who are all about this, and we'll see they're still saying that in a week or two. That's one of their main sort of arguments.
Right.
Yeah. The news is important. But if you're a busy real estate professional like me, you don't have time to skim through dozens of dry and ad-filled media outlets each day. That's why I read the CRE Daily. It's a free email newsletter that cuts through the clutter and delivers concise, witty commentary on the latest trends and transactions in commercial real estate. If you're a commercial real estate professional, you owe it to yourself to try it out and stay on top of what's happening in the industry. It's only 5 minutes a day. Visit credaily.com to sign up for free.
Right. And I think, again, this is like very Ferris Bueller of me, but the Smoot-Hawley tariffs have been in place since, the 1930s, and they've sort of just stayed in place. When I speak to the American Apparel Footwear Association, they for years have been lobbying, even before Trump, to get rid of these tariffs. And I don't think did you know that we had a tariff on apparel from Vietnam until yesterday?
No, I had no idea. I didn't even know about the de minimis threshold.
Yeah.
And now I'm very interested in how that works. So I need to go.
But the truth is, very few people in this country, and probably most countries, know any of this.
Yeah, exactly. And that's why it's so easy to hold up a chart and go, look at how evil this looks.
And that's exactly the conversation that I had with someone yesterday. Someone said, look, I don't have an economics background. When he tells me that we're paying a 30% tariff on UK goods, I believe him. And I said, and that's where my job comes in. And I need to try. I believe I feel a strong responsibility of putting forth facts. And I try
100%.
very hard not to be political, which is why I kind of danced around your question, because I don't know that there's a fact-based answer. I think when you say, is it good or bad? Well, I think that depends on how you view it.
And hats off to you, because it's hard to break down stay neutral. Such a multifaceted approach to someone.
It is. It's really, really hard. And I think, oftentimes I get accused on Twitter or X and otherwise of being biased, and I'm trying so hard.
I don't even know how you're not to be. Honestly, I just think
Jack reads the comments on our video.
I stay off of Twitter because I just think it's the most toxic.
Unfortunately, Twitter's changed.
But you have no choice.
I used to be very active on Twitter.
I'm sorry, X.
X, right? I used to be very active on X, but at the time when I was active on it, it was Twitter.
Right.
With a retail engagement and following, frankly, like that was mainly what I would be tweeting about, responding to. People would be asking me questions. And then under the new leadership of Elon Musk, and truly, like, once the algorithm changed, that sort of day that everything kind of got jerked around and stuff, all of a sudden I wasn't getting real engagement anymore. It was like a lot of bots or a lot of
the
bots. Don't get me started on these.
So anyways, but I do miss it because it was great engagement on like my nerdy retail stuff. I know there are other platforms available. I just frankly have been so busy. I haven't had time to sort of.
I mean, you need someone working for you full time just doing your social.
And I remember again in business school taking an economics class on sort of like the network effect, right? And it's like, I built this whole following on X, and like if I could just import them over to Threads or import them over to Blue Sky, but like I don't have time to restart that. No. So sadly, I
know that you have to get out of here. Give us your last like tidbits. Like, what should we watch for? What are you excited about? Give us anything.
One thing that we didn't talk about, which I feel like you probably talk about all the time on this podcast, but I just feel like I want to like plant my flag in the ground too, is I don't think that physical retail is going away. I think there will always be a place for physical retail. I think it is dramatically changing. I think when you look at things like vacancy rates at malls, they look pretty good, but I do think you need to like read below the surface. Well,
and on that note, malls seem to be coming back now.
Yeah, I mean, I think like 90s. Anything, when there becomes sort of a groundswell and an over exuberance, you get too much of something. And so like any natural business cycle, the weak ones are going to get weeded out. And so I think, the C and D malls, those that are left, there's hardly any, but they're gone. But the strong malls are really strong. Like the A and the A plus malls are not going anywhere.
Yeah.
And the composition of the stores within have certainly changed. And I don't even know if it's fair to even call them all stores now, right? Like some are service centers, some are dentist's office, or gyms or whatever the case is, to sort of drum up that traffic, which again comes back to our grocery store angle, where there are, different shopping centers that are really looking for these grocery tenants or these, Planet Fitness type places where people go with frequency. And then, hey, maybe as they like leave their Pilates class, they also pick up something from, the Gap store next door, or whatever the case may be. But
is experiential still a thing? Is that going to continue to be?
I think it has to be because, I mean, for instance, for me, I think online, I live in New York City, to be fair. I'm a mom. Convenience is very important for me. If I need a new jug of Tide, I don't need the experience of going into a big box store to get that. I know exactly what it is. I can count on that getting delivered.
You're not living for the experience of picking up some Tide.
But if I need a new pair of wide leg jeans,
you're going.
I would prefer to go into the store.
Totally.
Because I don't want to deal with like
returning
them. Then I got to go to the UPS store. Like that's such a flippin' pain,
Right.
So I think I've always said, I think buying online is easy and will accelerate. I think shopping is a better experience in store and will continue to be. I do think retailers have gotten way better at merging those businesses. I think, unfortunately, what happened was you had these retailers that started traditionally with a store, and then they started an e-com business and tried to bolt it on, and it didn't really work until they really integrated it, because there's nothing more frustrating as a consumer than seeing a pair of shoes online on sale on the website, and then you go into the store and they're like, oh, that's actually online only. And you're
Isn't
like,
that insane?
What?
It's like two separate companies.
Right, but you're like, you're the same brand.
Right.
And so I think it took a while for companies to figure that out on the back end to sort of match what consumers' expectations were on the front end. So anyways, this is just a really long way of saying I think real estate is still very valuable. The strong will only get stronger. I think we were overmauled and overstored. I think that's very obvious. And so you got to weed out the weak ones, and the ones that are left need to be reimagined. They're getting reimagined. And I think that every good business, for the most part, needs a really good marriage between online and in-store. And the one exception is TJX. And we didn't even get there. But holy crow.
I don't know how we missed that.
How do we miss that? It's like my favorite story in retail. They're notoriously very quiet from a media standpoint. Frankly, they don't need us. They're doing just great on their own.
They're good.
You know, they have a very small online presence. You can order some things, but very small.
TJ Maxx is an experience.
And it's a treasure hunt.
Yeah,
and
it's a treasure hunt.
It's Home Goods also, right?
Yes, it's TJX, Home Goods, Marshalls, Sierra Trading Post, and I think there's one other smaller one that I'm like blanking on because we don't have them out here. But and they're also international. The Maxx division in Europe. But anyways, that is a phenomenal story, and a lot of shopping centers are wanting a TJ Maxx. They're wanting a Home Goods. The buying team is incredible because there's like no two inventory that's the same in a TJ Maxx store, even within the same town.
Yeah.
You know, here in New York, for instance, like the TJ Maxx.
I never thought about that.
The TJ Maxx down on Wall Street doesn't have any children's stuff, and the TJ Maxx up on like Columbus and 101st Street has a great children's section.
Have you seen this thing where apparently, I don't know if this is true or not, but people would be buying something, taking it home, and then putting the receipt or the ticket, the QR code, whatever it is, the thing you scan on another piece of furniture in their home. And then they would take it back. And
It's
so
horrible.
people were going into these like Home Goods and seeing what they thought were maybe authentic pieces of furniture, but it's like someone's old side piece.
Oh my gosh, I love one. I mean, I should say I love, but I am very interested in stories about retail and return fraud.
Yeah.
Returns is like one of the most fascinating topics in retail. I think I'm such a nerd about
God,
returns.
I want to talk
AI
about
now.
this because to me, like I always wondered how that's
people
done.
are AIing fake receipts.
Oh,
and,
yeah.
like, using that for it's a big thing right
People
now.
also like will get a TV and they'll put a box and they'll put rocks in it and then ship it back and get a refund.
What?
Because they check the weight. Nobody's going to open
This
up
is
the
such
box
bullshit
again.
because then, you know, who pays for that? Everyone else.
The company.
Exactly. You guys are going to have me back to talk about
I was gonna
returns
say,
because I'm
have
a
you
real
back.
nerd for returns.
Let the tariffs bake in a little bit and let's see where all this goes.
Yeah,
And
maybe
we'd love to have you
take a
back on.
vacation after
Oh my
all these
gosh.
tariffs, hopefully, if they...
It's no time, Jack.
Yeah.
There could be more.
You know what I had for dinner 2 nights ago?
What's that?
A glass of wine and sweet tarts.
Boom.
So, you know, I need these tariffs to take a little break. I need a little breather.
Yeah.
Well, it'll be interesting what ends up happening. And thank you so much for taking a break
Thank you.
and
This
coming
is
on.
great.
Thanks for being here. Thanks for having me.